Ladies and gentlemen, welcome back to the channel. It is time for an intraday update on everything that's going on here in this market today, which it's been a wild one, so we got a lot to talk about, as well as with AMC Stock, because the data continues to support this rally that is coming. The technicals also continue to support a bullish uptick in AMC stock. So we got a lot to cover in a very short amount of time. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time, be a part of the action over there, link down below in the description of this video. ANET is a 400% winning trade that we put on last night to play their earnings. That stock is down almost 15% currently. So link down below if you guys want to be a part of it in the description of this video. But nonetheless, let's get into it. Today is the first day of the Fed meeting. Now, tomorrow is going to be the big day where we get information. We get the Fed interest rate hike, which we're all expecting to be 25 basis points. No shocker there. It's going to be 25 basis points. That's not really an argument right now. But what is an argument is the recent data that we have gotten is showing that inflation continues to go higher. And that's a problem. At the same time, inflation expectations becoming unanchored comes up over and over again in every single press conference. And the Fed has said that inflation has remained anchored. Well, the last reading that we got, it got unanchored. And inflation expectations went from 3.6% to 4.6% in 1 month's reading. That could be a factor that continues to make the Fed raise rates. And that's something the markets have really not expected. The markets really before today, we're expecting the Fed to come in, give you a hike, and give you a dovish pause. A dovish pause would be, we're going to pause rates. We're going to see how the data is. But from where we sit, it looks like inflation's under control enough to pause rates, to pause further rate hikes. Now, a lot of that is coming into doubt, especially since the data that we got today is pretty inflationary, right? Job openings. This is positive. This is not the inflationary part. They fell more than expected from 9.97 million to 9.59 million. Now, I think this is a negative thing here on the day in the markets. S&P 500 down about 1.4% currently, and it's negative because, yeah, we want to see the labor market weaken, right? But not at this fast of a pace. You're dropping almost 500,000 job openings in just a month, and this data is delayed, right? We're getting March data here. We just went through April, so how are those numbers looking like? Probably worse than the data that we just got. So it doesn't look that positive as far as the economic outlook. When everyone is screaming a recession is coming, well, the labor market and these job openings going down can be a sign of that recession to come. And ultimately, the markets, why do you think they care about the Fed raising rates? Well, they care about the Fed raising rates because it pushes you closer to a recession. So the ultimate fear is a recession. When you get recessionary data, it's going to be a negative thing. It's not going to be a positive thing for our markets. And that is part of what is happening today. On top of that, real estate prices continue to go higher. Again, not a good thing. And what we seen yesterday as well was the prices paid actually went a lot higher with the ISM manufacturing PMI. Prices paid expected to come in at 50. It came in at 53.2. So another inflationary data point that we're seeing here heading into the Fed meeting. Markets are saying, hey, this will affect the Fed's decision here. This will affect the Fed's communication of an upcoming pause, or if they will continue to raise rates. So that's really what has happened today. I think an even bigger story than all of that is the banking crisis that we're currently seeing. It's getting worse, guys. The KRE, the regional bank index, is down about 7% today, hitting its lowest levels since 2020. I mean, this whole banking crisis, this was the drop. I mean, you fell quite a bit, right? You were already sitting at the lows before today, and now you're down another 7% with companies like PACW down 30%, Western Alliance down over 15%. You know, stocks that and companies that people have thought has seen this crisis come and go. It's not looking like that is the case right now. And if this does continue, it's going to cause that deposit flight to also continue, and that will fuel a further banking crisis. Now, on one hand, that might be positive for markets and the Fed's decision to pause raising rates or not. But until we get information from the Fed tomorrow, it's not going to be definitive. Now, the Fed will come out at 2 p.m. tomorrow. They will give you the statement, and then more importantly, you will get the press conference coming at 2:30 p.m. Usually the statement it causes a move in the markets, sometimes a very dramatic move in the markets, but it's not the final move. For an example, if the markets rip up higher based off the statement, and if they use words like pausing or delayed, right? Well, sometimes the markets can rally off of that initially, but then once the press conference comes out, you're going to get that more so final direction and more information. So tomorrow at 2 p.m., if this is the last video you watch from me, don't take the 2 p.m. movement as final. That press conference at 2:30 p.m. is much more important. And like I said, if you guys want to come trade with me live in real time, I give you guys live updates on what Fed Jerome Powell is saying. Link down below in the description of this video. It's going to be a very big day. Now, on top of that, you're going to have some earnings today and after hours, but the big earnings is going to be on Thursday. Now, on Thursday, you're going to get Apple, Shopify, Block, Coinbase, DraftKings, Lyft, Booking Holdings, and Carvana. Obviously, Apple in and of itself is a major event for our markets, and I personally think Apple is heavily used as collateral backing these AMC short positions, because Apple is a stock that essentially all hedge funds have to own. If you're a hedge fund and you don't own Apple, then you're not going to be correlated with the markets. In good years where the S&P is up, call it 10% a year, if you're a hedge fund and you're up 5% or you're negative, you're going to lose clients. So you have to own Apple, and you've seen this correlation where when Apple goes higher, AMC stock goes lower, and when Apple goes lower, AMC stock does go higher. Not as much of a correlation here today, and I think that's obviously because of the pain that might or might not come in the economy based off some of the data points that we are getting. Now, earnings today in after hours, you're going to get AMD, Ford, Energy Transfer, Supermicro, what is that? Starbucks, Lumen, Livent, Match Group, Caesars, and Pay.com. So obviously Ford and AMD, those are going to be the big ones that can obviously move this market. Now, let's go ahead and get into some of the data here with AMC stock, give you guys a broad overview of what is currently going on. So a big number that I have been watching is the short interest value amount. This is the total amount of short positions in dollars that is held in AMC. A week ago, you were at about 700 million. Today, you're at 753.61 million. So this number continues to go higher, meaning shorts are incurring more losses. Shorts are adding to their positions, some of them at least, and it really makes it so a squeeze can be a little bit more dramatic. The higher this number goes, the more aggressive a squeeze is likely to be. Now, estimated short interest of free float here today at 25.83%. Free float out on loan at about 34.5%. 178 million shares that are currently out on loan. Days to cover at 4.95. And the cost to borrow rate trailing 3-month average at 244%. Cost to borrow average today is at 337.27%. Cost to borrow max at 358%. So the numbers you're seeing here continue to squeeze shorts out of short positions. That's a fact. You gotta hedge your short position here. If shorts alone in Q1 lost over 150%, how do you think they're feeling now? I mean, the stocks only went higher since the end of Q1. Cost to borrow rates remain to be at similar levels as Q1. So it's not like they're getting relief from really anywhere. I will say today the stock is down about 3.5% right now. Who knows what happens by the end of the day today, but this could be a lot worse. And it's all about perspective here, because when stocks like Nvidia are down almost a similar amount as AMC, that are seen as much quote unquote better businesses, like I said in the last video, then you should see AMC down a lot more, especially on a day like today where just everything is getting destroyed. I mean, regional banks down 7% is absolutely nutty, right? And if this continues, it's going to be pretty bad. I think there's a reason why these banks are down. It's because this crisis is not over. Now, the option activity, you are seeing 22 orders totaling about $5.5 million, positive order value of 4%. Now, on a technical basis, like I said, this could be a whole hell of a lot worse with AMC. You're still sitting above the 100 and the 50-day moving averages, which are at about $5.30 per share as an average, right in this range. They're pretty close together. AMC still sitting above that key level as well at $5.35 per share, where this blue line is. And it looks like the stock might make a move to retrace to the upside later in the day today, but you are still fully in a bullish uptrend, and I think it's likely to continue heading into earnings, especially if Fed Jerome Powell is not as bad as expected coming tomorrow. And then Thursday, I think that's a day where you can get a bigger move heading into AMC earnings that will come Friday pre-market. So that is going to do it for this video. Not too much else to actually say. Nothing really is happening out there, I want to say, besides the regional banks, besides the data we're getting. Not really anything new on AMC to report to you guys right now. So hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.